Have you ever broken your own rules in a trade and regretted it only seconds later? The truth is, most traders don't lose because of their strategy alone. They lose because of the way their own mind reacts under pressure, uncertainty, and emotional stress. Your biggest enemy isn't the market, it's you. But here's the twist. The same mind that sabotages your decisions can also become your greatest weapon once you learn how to train it correctly. In this lesson, you'll learn how to recognize the inner saboteurs that quietly cost traders money every single day, and how to transform those emotional reactions into strengths that create calmer, steadier, and more disciplined execution. As Mark Douglas explains in the book Trading in the Zone, success in trading comes from learning to think in probabilities instead of constantly searching for certainty. And that mindset shift, from emotional reaction to probabilistic thinking, is exactly what we're going to explore together throughout this lesson. So, if this type of content is valuable to you, remember to like the video, subscribe to the channel, and enable notifications so you don't miss the upcoming lessons. And feel free to share in the comments which topics you would like us to explore in future videos. You will also find links to our trusted partners in the description below. Using those links helps support the channel and allows us to continue producing this kind of educational content. So, let's begin with the first truth. The market itself is neutral. It doesn't care if you win or lose. It simply moves. Yet inside your mind, every tick feels personal, and every loss feels emotionally significant. That's because your brain was never designed for trading. It was designed for survival. When money is on the line, your mind interprets financial risk almost like physical danger. It reacts as if you were facing a real threat, even though the danger only exists on a screen. And that's why traders often struggle to follow their own plans. You hesitate to take valid entries. You exit too early because fear takes control. Or you impulsively chase moves because you're afraid of missing out. It's not simply a lack of discipline. Your brain is trying to protect you, but in trading, that protection mechanism often becomes self-sabotage. There's another trap as well: the illusion of control. Traders naturally crave certainty. They want to know exactly what will happen next before risking money. But markets don't offer certainty. They only offer probabilities. And when you demand certainty from an uncertain environment, emotional reactions and unnecessary mistakes become inevitable. Think about it. How many times have you waited for a trade to feel safer, only to miss the move completely? Or convinced yourself that a trade had to work right before taking a painful loss? Those are emotional decisions disguised as logic. The truth is, we rarely lose to the market itself. More often, we lose to the emotional stories and fears our own mind creates when facing uncertainty and risk. And here's the part most traders never fully realize. Those emotional reactions don't just stay inside your head. They immediately affect your body and the way you make decisions under pressure. The moment you see a large red candle or your P&L turning negative, your brain fires a stress response. Cortisol floods your system, your heartbeat increases, your breathing becomes shallow, your muscles tighten, and your vision narrows, almost like tunnel vision. At the same time, blood flow is redirected away from the logical part of your brain and toward survival systems designed for fight or flight reactions. That response is useful in real danger, but terrible when you're trying to manage risk calmly on a chart. And that's why traders suddenly hesitate, panic, freeze, or click impulsively at the worst possible moments. It's not just a bad habit. It's biology temporarily overriding logic. And if you don't recognize when this is happening, your body starts leading the trade instead of your plan, your rules, and your analysis. That's where the real enemies appear clearly: fear, greed, and impulsiveness. Fear makes you hesitate even when the setup is valid. Or it makes you exit too early because you're afraid to let the market breathe naturally. The setup may be correct, but fear prevents you from fully executing your strategy. Greed works differently, but it can be just as destructive. You catch a good win and suddenly feel unstoppable. You increase your size too aggressively, take trades outside your plan, or continue trading long after reaching your target. In the moment, it feels exciting, but that emotional high often leads directly to reckless decisions. Then, there's impulsiveness. You become tired of waiting, so you force trades that were never truly valid. You move your stop loss, hoping the market will reverse. You chase moves that already happened because you can't accept missing them. Deep down, you know it's reckless, but emotionally, it creates temporary relief. The problem is that these emotions rarely present themselves openly as fear or greed. Instead, they disguise themselves as logic. They whisper excuses like, "This setup is too good to miss," or "I'll just risk slightly more this time." But in reality, they slowly drain consistency and discipline over time. And the worst part is that trading accounts are usually not destroyed by one massive mistake. More often, they are destroyed by small, repeated decisions, moving a stop slightly farther away, ignoring one rule, adding one unnecessary position, or breaking your checklist just once. Over time, those small cracks become major problems. And here's the good news. The same mind that sabotages your trading can also become your greatest ally once you learn how to train it correctly. It starts with simple preparation, writing down your rules before the session begins, creating a checklist of conditions that must be present before you enter a trade. When your rules are clearly defined on paper, you stop negotiating with emotions in real time and start relying on structure instead of impulse. The next step is learning how to normalize risk properly. Instead of thinking, "I can't lose this trade," you define a fixed amount you are comfortable risking every single time. That way, a losing trade no longer feels like a threat. It simply becomes part of the probabilistic nature of trading. You can also create simple if-then plans for emotional situations before they happen. For example, if I feel afraid before entering a trade, then I will pause, breathe for 60 seconds, and review my checklist again. These small emotional protocols help you regain control when fear or impulsiveness begins to rise. Another important element is routine. A clean workspace, fewer distractions, and a short focus ritual before the session begins can completely change your mindset. Even something as simple as 2 minutes of controlled breathing can help calm your nervous system and improve decision-making. And finally, there's feedback. Keep a journal where you record not only the trade itself, but also how you felt emotionally before, during, and after execution. Over time, you'll start recognizing emotional patterns in yourself just as clearly as you recognize patterns on a chart. This is how you slowly transform your mind from an obstacle into a disciplined trading partner. This isn't just theory. Let's bring it into real trading situations. Picture this. You enter a valid setup that perfectly matches your plan, but fear slowly starts taking control as the candles move against you. Your emotions become stronger than your process, so you close the trade early just to relieve the pressure. Then, seconds later, the market explodes in your original direction exactly as planned. Your analysis was correct, but fear prevented you from allowing the trade enough room to develop naturally. Now let's flip the situation. You catch a strong winning trade and suddenly feel unstoppable. Confidence turns into overconfidence. In that emotional rush, you take another trade, then another, pushing far beyond your daily limit and abandoning your structure completely. By the end of the session, the original profit is gone, and now you're sitting in the red. That wasn't your strategy failing. That was greed taking control of your decisions. As Mark Douglas explains in Trading in the Zone, the market does not care about your emotions, expectations, or financial goals. It does not punish you or reward you personally. It simply moves. The real variable is how you respond emotionally and behaviorally to uncertainty. Once you begin thinking in probabilities, every trade becomes just one event within a much larger series of outcomes. No single win or loss defines you as a trader. And that's the real mindset shift successful traders eventually develop. Treating the market as neutral, while recognizing that managing yourself is the true challenge of trading. Now it's your turn to apply these ideas directly to your own trading. I want you to look back at 3 trades where you lost money, Not because the setup was bad, but because your emotions took control and caused you to break your original plan. For each trade, write down the full emotional sequence as honestly as possible. Start with the setup and the rule you were supposed to follow. Then, identify the emotion that became strongest in that moment, whether it was fear, greed, impatience, frustration, or overconfidence. Finally, write down the action you took that violated your process and what that emotional mistake ended up costing you financially, mentally, or emotionally. Once you finish that reflection, create one simple if-then plan for each situation. For example, if I feel fear before entering a trade, then I will pause, breathe slowly for 60 seconds, and review my checklist again before making any decision. These small emotional protocols create structure during moments when your psychology starts trying to take control. This exercise is powerful because it helps you identify the emotional patterns behind your mistakes instead of focusing only on the result of the trade itself. And once you can recognize those patterns clearly, you can begin replacing them with stronger habits and more disciplined behavior. And if you'd like to explore this subject more deeply, I highly recommend the book Trading in the Zone by Mark Douglas. It remains one of the most important books ever written about trading psychology and probabilistic thinking. Remember, you can't control the market. You can't control volatility, news events, or the outcome of any single trade. But you can control how you respond emotionally and behaviorally to everything the market throws at you. And that is where real consistency is built. Every time you recognize fear, greed, impatience, or impulsiveness rising inside you and still choose to follow your plan instead of reacting emotionally, that's a real victory. Those small moments may seem insignificant at first, but over time, they reshape the way you think, execute, and manage yourself as a trader. So take this week to complete the exercise seriously. Review those 3 trades, identify the emotional patterns behind them, and build your own if-then plans for the situations where you tend to lose control. You may be surprised by how much clarity, self-awareness, and confidence this process can bring to your trading. So, trader, if this video helped you gain more clarity, make sure to like the video, subscribe to the channel, and turn on notifications so you do not miss the next lessons. And let me know in the comments which topics you would like us to explore in future videos. If you want to go deeper with exclusive content, early access to videos, and additional tools to support your development, consider joining the ComLucro trader community right here on YouTube. It's a simple way to support the channel and a smart investment in your growth as a trader. You will also find links to our trusted partners in the description below. Using those links helps support the channel and allows us to keep producing this kind of educational content. Please also remember that the mission of the ComLucro channel is simple. We help traders build clarity, confidence, and structure, so every decision is made with discipline and intention. Here you will find complete courses designed as a true trading masterclass. We teach liquidity, market structure, higher time frame analysis, and supply and demand, always focused on understanding price and executing with a professional mindset. We also cover trading psychology, risk management, and long-term consistency, because trading is not just about charts. It is about mindset, discipline, and execution over time. Our main courses include Smart Money Concepts, ICT, Technical Analysis, Trading Psychology, and Wyckoff. Alongside that, we share insights from respected traders whose work helps you better understand how markets really behave. Thanks for watching, and I will see you in the next video.